Hey everyone, welcome, welcome, welcome. CEO Trades, where money works for you and me too. Now, today we're going to start looking into how to invest, why we invest, what can we get out of investing or trading. Most people are trading out there. Did you know that? But let's look at some of these differences in the next couple of slides. Things you should know about the stock market. This reminds me of the market. That's right. When you get on a roller coaster ride, what's the direction? It's usually down first. That's how the stock market starts on an average daily basis. At about 9:30, the average stock will go down. We'll have a dip. So why does it have this dip? It's normal. People sell. Maybe they got the opportunity that they wanted in making whatever goal that they had, or maybe they're afraid and they just want to sell because they can't bear going any lower. So that can happen. It's true. Your money can go up, your money can go down. However, it's not going to remain stalemate, or unless a company goes bankrupt and the company is ordered to close down, which can happen. Yes, it can happen. Don't be intimidated. I know that it's a big field. I know that there are many people watching out there, and there are very, very few players, realistic players, meaning there are plenty of stocks to choose from. There are all different types of businesses to choose from, but you've got to be careful. You've got to know why the play will work for you. Right? It's just not about picking any stock, the one that's on the left or the one that's on the right. It's why. Remember that. And if you go to these places, just like the stadium right here, you can see Southwest on the top there. Pointing my mouse here. Southwest. I don't know what the next one says. Don't know what it says. But then you have here Bud Light, Coca-Cola, Coca-Cola again, and you have Bud. So these are some things that you can invest in. Here's Dr. Pepper. So this is what happens wherever you go. People are wearing brands. People are showing off brands. You can see down here in the bottom many other brands. Stanley, you have Samsung, and you have many other brands. So you will come across whatever brand you're interested in. However, is it the right time to invest in it? That's what we're going to look on. Don't be intimidated. You're going to do well. The great thing about investing or trading, for that matter, is that there's no skills required, no degree required, but you must have patience and you must do the research. If you don't do the research, you can always pay for it. It's not accurate. Why? Because someone else is seeing the information before you, someone else is handling it in their advantage and possibly getting in before they give it to you. Lastly, there is always risk. You can lose it all. So don't put all your money into investing unless you are aware that you could lose it. If you want your money doubled, do you know what's the quickest and safest way? Just fold it in half. That's it. That's how you get your money to double quickly and safely. Any other way, there is risk involved. A good stock can take 2 to 7 years to grow. That's what the companies tell us. They tell us that we have the best surroundings, that investing is a personal thing that involves emotional strength to withstand volatility. The key is not the brain, it's the stomach. However, did you know that you can double or grow your investments much quicker than 2 to 7 years? That's right. That is correct. What am I going to do if the stock market goes down? Don't panic. That's number one. There could be terrible news, just like there was a few weeks ago. I didn't sell off. I could have sold off, but I chose to stay. I'm down on a few stocks. Some of them have made it back up. And the reality is that the ones that I'm down, I know are going to make the most money because they take the longest to go up, it's not necessarily meaning that they're going to give me the least amount of returns. They're going to give me the best amount of returns. You better believe it. So for every situation, it's different. It depends on the stock that you're investing in. In the case that I'm talking about is Apple. What am I going to do if the stock market goes down? There's a key to everything. And that key is patience. Patience. You're going to feel anxious. You're going to want to sell. You're going to want to run away. You might want to pull your hair out. Do not commit suicide. Many people in the past have committed suicide because they've had a loss. It's okay. We all lose money, but we all make money multiplied of what our losses are in the long run. So be patient. Behind the company can be hidden assets. You see Disney? Disney, when it started, was a cartoon, but then it created Disney World, Epcot Center. The name is a resource behind the company. TV, souvenirs, real estate, hotels, parks, restaurants. Companies pay to build on their property. Real estate is not reflected on reports. So just keep that in mind, just like Disney. Disney is super powerful when you mention it and when you think about it. How much of your portfolio should be in stocks? Well, this is the estimate that is given to people when they go to a company. Take your age and subtract it from 110. So if you are 30 years old, you should have 80% in stocks, 10% of your income, or 10% of your income. It's up to you. I like to put in 20 to 30% because I know the more I put in, the faster I get returns multiplied, because the little amounts, they're good. So it gets you to build a routine to be able to do this on a daily basis, building that habit of investing and trading as well. How many different stocks should you buy? You could buy one, you could buy 5, you could buy up to 15. Start out small, all right? I'd say don't look at more than 1, maybe up to 3 stocks at the beginning. That's what I did. I had a huge list, I remember, then I had to cut down. And as I became more focused, it was easier to keep track of them, all right? When you pick these stocks, consider picking across different industries. Maybe you like one specific industry, but what happens if the tech stocks are down, or if the biotechs are down, transportation is down? What do you do if you're not invested in other parts and other sectors of the stock market? That's something to answer. What are the first steps to invest? Well, first, focus on a company. What's it making? Is there any competition, and what are they doing? Where's the money coming from? Is it loans? Are there grants? Are there investors? Where is it coming from? Is it growing? And how's the stock behavior? Is it on a constant? Is it going up and down? Is it dead, meaning flat? All right. Always think about the story and not necessarily the stock. All right. The story behind the company is the most important thing. Who's managing it? Maybe the managers are very well known, or maybe they run a system that you might like. This is the app that I started with, Robinhood. It's one of those economical apps out there. I'm not saying it's the best app. I'm not saying it's the worst app. This is where I started because I heard free, and that was good for me. So investing is for free, supposedly, but when Robinhood got sued several months ago, they were sued because they weren't charging the customers. They were getting cutbacks from the companies that you invest in. That's how they were making their money. So they got sued because in the end, they were making money. As you can see, you could track your stocks on your wrist. You could track it on your cell phone. You can do it on a laptop. I highly, highly recommend the laptop use. This app is a little easier to use on a phone as well, but the laptop is where you can make better decisions. As I started out with Robinhood, I didn't know much about the analysis behind all stocks and so on. So Robinhood was just right for me. As I became more and more experienced, more advanced, I branched out to other softwares such as Thinkorswim, which is TD Ameritrade, E-Trade, which I don't really care for. Webull is not terrible. And I have a few other softwares, especially for crypto. Crypto has, I think I have 4 or 5 softwares in crypto. And investing in the long run is what the name of the game is. If you're looking to become a millionaire overnight, it's possible, but it's rare. So just build up a routine for investing. Pick a certain software that you can utilize. This is the one I started in. It's not my main software anymore. It's actually one of my backup softwares. Apple, here's how you look at a stock. This is the look of on a mobile phone. On the left would be the face of the mobile phone first. You can see that Apple was worth $185. Actually, currently it's worth at $122 a share right now. So the stock is down, and Apple will go up. It's going to go up. It's rated to go up to somewhere around 180 to 215 right now. So those of you who are invested right now, guess what? Sooner or later, you're going to be pocketing in some pretty good returns. All right. You can see here a small chart that's on the schedule of one day chart. You could see the 1W means weekly, M means monthly, 1 month, 3 month, 1 year, 5 year. So these charts are not great because this line doesn't really help. So at the beginning when I was starting this, then I saw this here and I clicked and you could see how it changes red and green, because that way you know when it goes up and down. And some people just operate much easier when they can tell when the market's up and when it's down. So that's me. I operate that way. Statistics. Statistics are very important. These are fundamental and technical analysis all incorporated into one. It's not everything, but it is something. So there's the open price, today's high. I don't know what's below, but I know it's average volume on the right. 19 million volume is what's done on a daily basis. The market cap of the company, 880.31 billion. Volatility is low. Maintenance requirement, and how much buying power for Apple. Buying power is important. I don't really look at it, but some people swear by it. I don't. I have no utilization of buying power right at this moment. I just never had. Tim Cook is the current CEO of Apple. You can research him and see what he's doing. That's right. So here's more information through Robinhood. So today's high, today's low, 52-week high, 52-week low. So that way you can see a range. But you could also be able to see this if you look at a yearly chart. The PE ratio. PE ratio is a number that you multiply by the value of the average stock, and that's how you get what the move of Apple stock should be. And this one is pretty good. Dividend yield, that's how much you get every 3 or 4 months for dividends. I don't follow dividends. Sometimes I land on a dividend, great, woohoo, but I don't live for two cents or whatever it is, because when you're starting out, this is the type of app you'd use. And if 2 cents makes you happy, then great. I mean, it gets you closer to becoming a millionaire, really, right? So another good thing about Robinhood is you get news, where it's featured in on the right, what the buy rating is. So these are very important tasks. Now here is a watch list. These are some of the stocks I've been watching. As you can see, Ford is on the top. Ford, I have invested in, well, at that point I was 100 shares in, 96 shares for Fit, 30 for JetBlue, and so on. Zenga, Icon here, NSPR, 10X. So these stocks back then, 2 years ago, were worth about $8. Last year, March, these stocks, when during COVID, went down to $2.50, this Ford. And I'm up a few $1,000s right now in Ford, which is really, really productive for me. Index funds versus individual stocks. Some people like index funds. I need to have certain index funds. However, in the long run, the stocks, the trades are going to give me the better returns. Why do I say this? Because I've seen that for the last 5 or 6 years that I've been invested in index funds, on average, all I get is 3 to 4%. 1 year, we got 8%. Well, did you know you can do that in a couple of minutes trading? Did you know you can get much more from that if you know how to utilize leverage to your advantage? If your money is spread across hundreds of stocks, there's minimal loss, a risk of loss. And this is what is told for the utilization of index funds. Minimal loss of risk. Yep, I'm invested in a few different sectors. Stocks, not in index funds. Index funds are for those people who have millions and millions of dollars. They don't know what to do with it. They just park it. And as long as they're making a return, they're happy. Do you have $1 million? Millions of dollars? If you don't, how are you going to make the returns that you need to survive on a daily basis? You've got to make that happen right now. Dividends or no dividends? In general, but not always, dividend stocks less volatile and more defensive than non-dividend stocks. They are less volatile and are more defensive. Over the past 80 years, dividends were responsible for 44% of the total return of the S&P 500 index. 44% of the total return. Well, when you have a company with dividends and you feel that it is right for you, why not? Go for it, as long as you feel it's right, because you should have that internal conversation. Does your brain tell you, ask you the question, and what does your heart respond? Does it say it's a right move? Does it not? Sometimes we have to get accustomed to what I'm saying here because it's crazy talk. If your heart tells you to move in, move. If your brain questions it, then don't move. This is a type of investment that's seen when you go to a broker. So these are mutual funds. You can see here the number of shares right here, 1,700 shares, 1.7 million shares at the price of $10.60. So that's how this works. That's how when you invest in a company, how they take care of the assets for you. And in the end, the company makes more money than you do. What do you expect? How much profit can you expect? Well, take a long-term view of the markets. You could gain or lose. This is an opportune time because the last several years have not kept up with what the S&P 500 produces over the any type of 25-year period before the last decade. I'd say on average gives you 9% return, but now that's changed. Expect this level, even though over any shorter stretch, it can vary significantly. You can make more than this on a daily basis or on a weekly basis or on a monthly basis. I mean, can you imagine making 5% returns every month? That's 60% return in 1 year, not 9%. Not 3%, not 4%. I'm lowballing it. 5% a month of returns. That is a basic goal of mine, all right? Minimum of 5%. But what happens if you go to 10, 20% returns on a monthly basis? Geez, you'd be very powerful. So most people want to buy stocks just because it's being alerted somewhere, maybe on Twitter, maybe on Reddit, maybe in some chat room. Well, if you can't clearly explain what a company does in a sentence or two, why would you invest in it? You see, there are biotech companies, great way to make money. Most people don't know about them. They don't know what they do. They don't know when they're coming or going. They don't know the perspective of what these companies do. At the beginning, I didn't know. I had no idea. But as I learned more and more about them, yeah, these are pretty good companies to invest in, but they're highly risky, very risky companies. Now, some of the biotech companies that you've heard of that are not risky are Pfizer, Moderna, AstraZeneca, just a few. And there are many others that you know about. Realty Income, FedEx, Google are rather straightforward. Well, if you invest in land, you know that you can get it back. However, every now and then there is a a market crash in that sector. So just be careful. Invest in businesses that are easy for you to understand, especially while you're just starting out. That's right. Now, how do I know when to choose specific stocks? That we're going to look at on another video. So, but right now, here's another stock, Aceto. If I pronounce it wrong, hey, ACET is what I pronounce it as, ACET, because that's the ticker symbol. All right. So you can see on the top here, it was down 0.0095 cents today, that day, and then up 0% after hours. So you can see it went from this high down, 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 down. You see how much easier it is to read when it's red, green, instead of that graph right here like that, right? How many shares was I in? I was in 1,500 shares at an average cost of 18 cents. The value, $270. So I was looking to make some money. It says a return of 5%. Just so you're aware, that's not bad, 5% in one day, right? You can see the open price, today's high, today's low, the 52-week high, the 52-week low. That means we're almost at the bottom right here. So these are stocks that are highly volatile. We don't know if they're coming back, but they're like, this stock here is probably on the verge of being delisted from NASDAQ, because it has to maintain, I believe it's $1 rating to be able to stay on the NASDAQ, right? Never, ever stop learning. I know everybody's interested in increasing their bank accounts. I know that that is a priority for whatever it is. Maybe you want to buy something for your kids or your wife or your spouse, your husband. Maybe you want to go on a much needed vacation. Or maybe you're like me, take trips. I don't do vacations, I do trips with the family. So how do you get these bank accounts going? You've got to build a different type of account. What account is it? Your knowledge account. I'll never know everything about investing. But if you're continuously absorbing information about how the market works, how to evaluate stocks and other investing topics, if you do that, your investing skills will grow over time, and so will your portfolio. Now, down here is a link. If you're interested in downloading Robinhood, I recommend that you do. In the end, Robinhood will give you 2 or 3 stocks as long as you do what their minimum requirement is. And maybe you can park some money there. Park like $500, $1,000, $10,000. I don't know how much. Everyone is different. We all have different goals. But if you have bigger amounts to invest, I suggest you getting on a conversation with me, one-on-one conversation, so that we can talk about it. All right. So this is it for this video today. This is CEO Trades, stock market tips, secrets to success, where money works for you. This is session 202. I recommend that you have an open heart, an open mind to learning, so that if you learn, if you become a sponge in all of this, eventually you'll be able to make your own trades, and you might not need too many people forwarding you advice on where to invest and where not to invest. Have a good one, and until the next recording.